Thanks. Bye. Good morning or afternoon. Running a little bit late here. Sorry, technical difficulties. So let's just see if anybody's here, and seeing a few people jumping on. Sorry about coming in a little bit late here, but a few technical difficulties. But if you've got any questions, go ahead and start firing them in here. I'm Travis Watkins. I'm a tax attorney, and we are working furiously to help folks out with the employee retention tax credit. Letting a few more people jump on here. And then we'll get straight away to your questions. So just go ahead and fire them in there. All right, well, let's go ahead and get started, and we'll start hitting the questions. But again, I'm Travis Watkins. I'm a tax attorney, and we've been doing the ERTC credits here for a few months now, and seeing a whole bunch of big checks coming in for clients, and helping them out with this tax credit that won't be around forever. The IRS has changed some things. Congress has changed some things. And so I think it's more inclusive for business owners now to get involved with the ERTC. And if you haven't taken a look at it, or taken a look at it recently, the changes may be surprising to you. More people are getting qualified for this every day. Little history on the ERTC. This thing actually came out at the same time as the Paycheck Protection Program back in 2020. They kind of came out really side by side, and not a whole lot of people really understood it. The kind of confusing thing about it was that they initially said that you could either take one or the other. You can't take both PPP and ERTC. So a lot of people immediately, since they were already in the throes of doing their PPP applications, and there was this mad feeding frenzy to try to get to it quickly, that they just decided to go ahead and do PPP. And if that was you, I certainly was the same way when it came out. I didn't want to miss the PPP. So we were just furiously working for our clients and for my own business to try to fit in the PPP. So if that was you, then you need to take a look at this again, because Congress has changed things enough to where it's worth taking an extra look now. First item of business is it is somewhat like the PPP, to the extent that you do have to have employees. That's the question that we get quite a bit, and it's the threshold question. You've really got to pay attention to that. It's somewhat confusing with PPP, because PPP was allowed at one point, if you'll recall, to be applied to independent contractors, folks that didn't have traditional employees. A little different equation for that, but this ain't that. It's something different. You do have to have traditional W-2 employees, and if you don't, then I'm sorry, you're not going to be in the running for the ERTC. But if you do have employees, or you had employees at the time, then you do qualify for ERTC. You've got to look at a couple of things on the way into ERTC. Really, the first thing that we look at is the more traditional requirement. There's 3 ways in. I got a question here. Is this an option for employees that receive a 1099? Employees that receive a 1099 are not really technically employees, unfortunately, so that doesn't apply You do have to have W-2 employees for this thing. But again, three real questions here. You're either suffered a substantial economic loss, and that has different meanings for different tax years, or you were shut down by governmental order, or you suffered some type of supply chain loss there or disruption in your supply chain. So um, the more traditional ones, the easier ones really to look at are if you're shut down for some period of time, that quarter is going to obviously be um, it's going to be a qualifier. Or if you suffered either a 50% in 2020 um, reduction in your gross revenue versus that same quarter in 2019, then you're going to qualify. Same type of analysis for 2021. You're going to compare 2021 quarters to 2019 quarters. However, it's not 50% for 2021. It's only 20%. So as you can see, like I said, Congress trying to move this thing more towards letting more business owners into the program. And there's 400 billion out there to get. To kind of put that in perspective, the first round of PPP was 500 billion. And that went in 120 days. This is not going in 120 days. There seems to be quite a bit more left out there. Last I heard, there had only been 5% taken by qualified employers at this point. So worth taking a look at. The third thing you want to look at is the supply chain disruption, and that's the squishier one. That's the one that is a little more fluid, I guess, to fit into. But gosh, who hasn't suffered some type of a supply chain disruption? We got a question here. I had a business that had increased revenue, but had to make accommodations to work from a distance. Can I qualify? Supply issue, probably, possibly. Yeah, that's a great one. Because as I'm saying, the supply chain disruption is squishier, and it's also meant to get more businesses in there. And the IRS is not really taking a look, even at this point. Things are going through right now, and you want to have your um, ducks in a row for sure, and documentation for that. But yeah. Even if you had increased revenue, if there's a um, some type of a supply chain disruption there, those losses are a little more, difficult to see. You may be experiencing them now in 2022, even if your revenue went up technically in 2021. So yeah, it's a little more hidden, I guess. But yeah, I think that's a supply chain issue. Another question. He says, example, drive-through window for my clients instead of in person. Um, yeah, that could be something there because it's an ethereal kind of a loss. It's something that's not super tangible, but if you're seeing your clientele, for instance, going down, um, or work not getting done nearly as fast. Let me give you an example from my own practice. The IRS shut down in uh, first quarter of 2020. They didn't open back up again until about August of 2020, and that pushed things back really, really far. We do a lot of tax uh, returns, and probably heard that the IRS is so far behind on some tax returns, getting those processed and assessed. It's created a massive flow problem, a disruption to our supply chain, because a lot of our clients, they have to have assessed balances in order to really get cracking with the IRS on getting some type of a full resolution. So that's just an example. some third party that you depend on for your revenue and livelihood is either partially or fully shut down, or not, firing on all cylinders, not getting us, in that example, the piece of the puzzle that we need, which are assessed tax returns, so that we can assist our clients to move forward um, in that process. So that's one to definitely take a look at. If you have other questions, please ask them here. We're going to be doing this every Monday at noon Central Time. And let me just hit a couple other ones here that come up quite frequently. Do family employees qualify for ERTC? That's another issue. So we talked about independent contractors, no. Have to have actual employees, and that's really every employee can go into that into that calculation for how much ERTC there is, and we can talk about that in just a second too, about that calculation a little closer. But family members, unfortunately, do not qualify, and neither do owners. So 50% or more ownership, you're not going to be able to qualify that employee either, just because of the plain language of the statute. So here we go. Got another question. What if I have a tax problem? Can I still qualify for the ERTC? That's a great question, and we deal with tax troubled clients, businesses, and individuals, and so that is a frequent question that we have too. Is if I owe some payroll taxes, is that going to it was exempt? They wouldn't offset that. So this is a little bit different than that. Unfortunately, if you have a tax problem, if you owe for certain quarters, any quarters really, and that's been assessed against the company or the company owners, then there will be an offset if you otherwise qualify for the ERTC. However, that can be a pretty good way to pay off your tax debt, because that's going to be applied to the oldest quarters first. But why not use free money to pay off the tax debt if that's what you indeed have? What all do I need to take advantage of the ERTC? That's a great question. Really, what we need from the outset are profit and loss statements for each quarter, because again, we want to look at if there was any type of reduction in the gross revenues there for 2020. You're comparing quarters of 2020 to 2019 and looking for a quarter that has a 50% or more reduction in gross revenue. And for 2021, same deal, comparing that to 2019 to see if there's a 20% or more reduction. So starts with profit and loss. And a lot of folks may not have the profit and loss statements ready. And what I call that is kicking it old school. We just got to get the bank statements together and put your gross revenue for each month, classify them into quarters, January through March, April through June, July through August, and September through December, and just compare those quarters across the line. 940, profit and loss is the best for that, but not essential. And we're not going to have to turn that in to the IRS when we go to do that either. We're just, it's kind of like we're experiencing some technical difficulties here, but we'll keep going. Or you have the supply chain issue. Other things that you're going to need is 941s. Those are the payroll reports for each quarter. And you're also, if you've received the PPP, you're going to need to have your PPP forgiveness documents, really the worksheets that showed how you spent that. And I'll cover a little bit more about that in just a second. But employee detail would also be good there, so that we can see which employees will go into the calculation. So once you've qualified the business for some quarter or quarters that would be eligible for ERTC, then you look at the calculations themselves, and we look at how much payroll and payroll tax that you pay. Going to be a 70%. Just you take everything times 0.7 to come up with what the ERTC amount is going to be, and then that goes straight on to it goes straight to the 941X. There used to be which 941X is a 941, and your 941, you check the box for the ERTC credit, and then you file that with the IRS, and the IRS is going to be processing this for a while. They're a little unmanned in this department, surprisingly still, even though there's been a significant amount of money that has been allocated to ERTC. It's still going to take a couple of months to get that money in. But the way to making the claim for it is through the 941X. Another question that we get quite a bit is this going to be taxable? And no, this is not taxable money. Once you qualify for ERTC and the money comes in, there's no strings attached to it. It's not like PPP where you had to spend it on payroll, rent, utilities, whatever. It just goes to replenish you, to reward you for keeping employees during the pandemic and beyond. So no taxation there. Now, you do need to be aware that could, since you're amending your 941X, that could, if you receive money ultimately from this, that'll change your corporate tax return. If you're a 1065 partnership, for example, you would need to change your 1065, and it would actually be decreasing some of your expenses that you had on payroll during that portion. That sounds a little scary. That does sound like strings that are attached, but I don't think that it is. I mean, what we're seeing is that the amounts are so significant here. I mean, they're essentially paying for 70% of your payroll during these qualifying quarters. Hold a little bit back when you get your check. I'd say hold at least a quarter of it back. That way, if there's anything, once you amend your 941s, and therefore if you would have to amend your 1065 or your 1120 corporate return, those things are going to flow down to the owners. Did K1, that could also result in a taxable situation, although the money itself is not taxable, could result in a change there for your personal return that would need to be amended and paid. But heck, getting to retain 70% of your full payroll plus another 75% of that amount and pay some tax on it, still a game changer for a lot of the clients that we're seeing taking advantage of this. All right. Well, if you have further questions, you can give us a call. The best way to on this would be by calling our office. give us a shout at 405-607-1192. There's also got to be some numbers here that I'm just missing from that are displayed prominently, I'm assuming, on YouTube here. But give us a call. We'll walk you through the process. You can also go to traviswatkins.com. We've got a page there, documents with there's no real obligation. There's no reason not to do this. You send in the web form. I'm seeing a question there. I sent in the web form. That web form goes to our Ertc specialists here in our office, and we'll get right back with you to talk about qualifications and the ball rolling here quickly, because it is like any government handout. It's subject to change at any time. It's subject to go away. Once the money is gone, it's gone, we assume. There hasn't been any more allocation of this. So get it while the getting's good. All right. Well, if you don't have any other questions, we'll sign off here. We'll come back in next week and answer more of these things. And hope you have a great day.